last year, you've made a ton of money. So there you have it. I really don't know what's going to happen from here, but I tend to think things still have to get a lot worse to flush everything through the system.
And for people who don't know, the VIX is the ticker symbol that you can look up yourself for the CBOE's volatility index. Just measures the stock market's expectation of volatility based on the S&P index's options trading. If you look at oil, Sachs, we are now down to $87 for a barrel. Haven't been here since, looks like, February maybe. And gas prices plummeting. Something going well in this regard? What are your thoughts?
Yeah, I mean, it's that particular commodity is coming down. I still think we have a big inflation problem.
Why do you think it's going down?
I guess production's stepping up. I mean, in response to higher prices, people increase production, and the price comes down.
No. There's less demand. The crazy sad thing about this whole thing with Biden was that OPEC came back and they basically said we can increase like 600,000 barrels a day. But the only two countries that are able to do it were, I think, Kuwait and Saudi. And the total number of barrels is about 100,000. So with all the bluster and all of this stuff,
you're right. Actually,
there's no supply.
It's because the interest rate increases are actually having an effect.
Correct.
These rate increases are like chemotherapy. It's on the economy.
The gas demand is lower than the summer of 2020 in the middle of the pandemic.
Yeah.
In the United States.
Yeah, you're right. So the commodity prices are reflecting expectations that the economy is slowing down and maybe in a recession.
So supply modestly up. Demand massively down equals, hey, we want to get people to buy this commodity. It will lower the prices. Lo and behold, the same thing is happening a little bit with groceries, and we'll see what happens with travel. Homes also spectacularly falling down in price, and the inventory spiking as well. So what's your take here? Unpack the 75 basis point increase in the chemotherapy that you were going down that road.
Well, let me just speak to this rally in the market for a second, because I think there was a really interesting chart that Philippe Lafont showed at that COTU summit that we talked about on this pod a few months ago. And I'll just put it on the screen. I put it in the chat. What it basically shows is that during protracted bear markets, you can still get substantial bear market rallies. And so during the 2001 dot-com crash, you had these plus 32%, plus 41%, plus 45% rallies. But even while the market as a whole was going down. And so they ended up being sort of sucker rallies. Now, I don't know if that is what's happening here, but it is a possibility.
One interpretation, Sachs, of this could be people are picking the winning stocks while the losers continue to lose, and that's what's causing this, jagged edge or the dead cat bouncing, as they say. Which is what we're seeing in a lot of these public companies, right? I don't know if you're watching, but Uber, obviously I'm still a big shareholder, had a massive print, and other companies have been doing equally as well, Apple included.
I think two things happened last week. One is there were a number of companies that reported good earnings, and I think even more importantly, had strong forecasts. So that helped. And I think it was just there was so much pessimism and negativity that just companies reporting decreases that weren't as bad as people were expecting created some room to move up. But the other thing that drove the rally is that the Fed made these comments on the heels of that 75 basis point rate increase that we were close to neutral. And so the market seemed to get really optimistic that we wouldn't get much more in the way of rate increases. Maybe there'd be a 50 basis point rate increase towards the end of the year, which would bring the Fed funds rate up to about the 2-year bond rate. So the idea was we're close to neutral, and markets really reacted to that. The thing about that is, though, that I think what Powell and what the Fed says today about rates is way less important than what the inflation data will actually show in a few months. If we still have 9% inflation 3 months from now, then I don't think the rate increases are done. So at the end of the day, I think that the data here is going to be a lot more important than what the Fed says, because certainly the Fed has said a lot of things over the past couple of years that turned out not to be true.
You would agree they seem to be doing something correct here at the 75 bips, and taking it a little more seriously. It's having an impact.
I'll say it again. I've said it now 5 pods in a row. We've never seen a moment in history, in American history, where when CPI has printed successively above 5%, that it got under 5% without Fed funds getting to that same number. So we should all hope that this is the exception that proves the rule, but there's an enormous amount of data that would tell you that we have to take rates to double what the equilibrium rate is thought to be right now.
There was no print in August. They take the month of August off. They could do an emergency print, and then they're expecting 50 or 75 bips in September. If they do that, Sachs, Chamath, Freeberg.
I think 50 is the expectation for September. But look, I think it's appropriate now, after all the rate increases they've done, to take a pause. They're going to get 2 full months now of inflation data before the September Fed meeting. I think it's appropriate to let the economy digest these rate increases and see where we're at. And let's see where the next few months inflation print is, and then that'll determine what happens next.
Freeberg, based on all this, what's your outlook for the economy?
I think there's more. We all try and be predictive based on the current set of conditions in the world. And there are a number of conditions in the world that the switch could flip very quickly. And there's enough of those triggering events right now that the probability of any one or any set of them happening in the next couple of months is probably pretty high. I kind of talked about it on the show a few weeks ago that it's like a bunch of tortoises sticking their head out of the shell. And, there's a few that might pop out here. There's obviously a massive problem with getting gas to Western Europe for this winter. There's an emerging problem with food insecurity in Africa, South Asia, around the world. There is obviously continuing escalating conflict in Eastern Europe. This NATO situation may or may not help. The Taiwan visit may or may not help.
Is it escalating? Yeah.
Well, I mean, I think, Sweden and whatnot joining NATO is
okay.
Is going to be viewed as provocatory. And, it could not make things cooler and calmer over there, but make them more tense. I mean, we view it as a security issue, but it really is a conflict escalation issue. And then I think that there are emerging markets problems. Argentina is facing 60% inflation. Brazil has a criminal as their president right now, and he has said publicly in the last couple of days that he will not leave office if he loses the election because the election is fraudulent. And if that happens, then you could see massive civil unrest. He's been encouraging the population in Brazil to go to the streets and fight back. And there are a number of these flashpoints. And by the way, that's a massive food supplier, as well as a massive holding in EM credit portfolios around the world. U.S. consumer credit is a problem. We just had the largest number of new credit card accounts opened since 2008 in Q2 from the New York Fed report yesterday. All of these things I'm painting as pictures of potential flashpoints for what could quickly become wildfires or brush fires that spread very quickly in markets and could escalate some of the considerations. So I don't feel like I look around and say, everything is good, we're in a good place. There are some indications that some of these stagflationary considerations and concerns we may have had in the way that markets are behaving right now gives us a pause, gives us a respite, makes us feel okay. But there are also a lot of things that could go wrong. And any one of those things could be a triggering point. So I always think in terms of probabilities. There's a whole bunch of low probability things, but when you have enough low probability